It began with one post. A single, furious burst from Donald Trump's social feed. Starting November 1st, all Chinese imports will face a 100% tariff.
The president revealing this in just the last few minutes here in a Truth Social post. That sudden escalation came just as it looked like the trade war was cooling off a bit, and it triggered a very rough day on Wall Street. The markets went into a sell-off, all three indices way down. The Dow dropping almost 900 points. That's a 2% loss, more or less. S&P down 2.5%. Nasdaq down 3.5%.
No warning, no policy paper, no briefing. Just raw anger projected into the global economy. Within minutes, Wall Street froze. The Dow plunged 880 points. The S&P 500 slid 2.7%, and the Nasdaq crumbled 3.6%. Billions evaporated. Oil prices sank below $60 a barrel. Bitcoin crashed 12%. Ethereum followed. Over $19 billion in leveraged crypto positions were wiped out before most traders finished their morning coffee. On trading floors from New York to Singapore, screens bled red. It wasn't just a market correction, it was a panic attack. For a moment, it felt like the world was watching the return of 2018, chaos by tweet, policy by impulse. Gold surged to $4,000 per ounce. Investors fled to safety, but in Beijing, silence. There was no press conference, no retaliation, no shouting match. China did what it does best. It waited. Days earlier, Beijing's Ministry of Commerce had already set the trap. It quietly tightened export controls on rare earth materials, the invisible lifeblood of America's tech and defense industries. Mining, refining, magnets. Every link in the supply chain now required new licenses. And since China controls 70% of global mining and over 90% of processing, the message was surgical. You depend on us, not the other way around. While Trump thundered for headlines, Beijing tightened its grip on the minerals behind fighter jets, iPhones, and electric vehicles. The contrast couldn't be sharper. America shouting, China calculating. The White House fueled a fire. Beijing quietly turned down the oxygen. As markets reeled, Washington scrambled to explain. Trump called the tariffs a patriotic necessity. He claimed Beijing was waging economic warfare by hoarding rare earth minerals. But analysts saw something else: desperation wrapped in bravado. Nearly $470 billion in Chinese imports were now under threat. Everyday items, electronics, tools, home appliances, all set to double in price overnight. U.S. manufacturers panicked. Small businesses warned of layoffs. And consumers? They were about to pay the price of Trump's fury. The president's own advisors looked blindsided. The U.S. trade representative had no plan, no roadmap, no timeline. It was policy born from impulse, a global shock made in 280 characters. On Bloomberg, one analyst said it best: "This isn't strategy, it's theater, and the world's economy is the stage." Then came the move no one expected. October 14th, 5 days after Trump's announcement, China's Ministry of Transport quietly unveiled new port fees for American vessels. Any U.S.-owned or operated ship entering Chinese ports would now pay 400 yuan per ton, rising steadily each year until 2028. No fury, no spectacle. Just math and patience. It targeted the veins of global commerce, shipping lanes that move 80% of the world's goods. Most of those vessels aren't even Chinese. They're global carriers, often financed by U.S. investors. And now, every one of them would bleed a little profit, one voyage at a time. In Beijing's statement, there was just one chilling line: "We do not seek a tariff war, but we are not afraid of one." No bluster, no insults, only calm defiance. That tone, quiet, disciplined, spoke louder than Trump's roar. By week's end, chaos spread across every market. The Philadelphia Semiconductor Index fell 6%. Chip makers like Nvidia, AMD, and Intel faced brutal sell-offs. Tech giants began slashing projections. The dollar weakened, while the yen and Swiss franc surged. Even oil traders, usually immune to politics, panicked as U.S. crude dipped below $60 for the first time in 6 months. Meanwhile, Chinese state media aired a single headline: "Stability is strength." That was all. No gloating, no threat, just confidence. It was psychological warfare, and Trump didn't seem to notice. Instead, he doubled down. He declared the tariffs were just the beginning, promising to make China pay like never before. But global investors had already made up their minds. The U.S. looked erratic. China looked in control. Money began flowing east. In just 2 weeks, foreign holdings of Chinese bonds jumped by $20 billion. For the first time in years, Asia looked like the safer bet. Inside the White House, panic met denial. Economic advisors clashed. Treasury officials begged for restraint. But Trump was riding the chaos like a showman. turning volatility into performance. He told reporters, "Markets go up, markets go down. What matters is America wins." Yet the data said otherwise. Economists warned that tariffs of this scale could shave 6% off GDP and cut wages by 5% over time. American importers faced impossible math: pay double for goods or shut down entirely. Farmers were hit next. China's soybean imports from the US collapsed to a 20-year low. Warehouses in Illinois filled with unsold grain as Brazil quietly took America's place in the Chinese market.
This year, that number is effectively zero after Beijing imposed 20% tariffs on U.S. soybeans in retaliation for tariffs on Chinese goods. And as you can imagine, that means farmers are really hurting right now. President Trump is said to be considering a bailout of at least $10 billion for farmers. The concern, though, that may be too little too late for some. According to court data, farm bankruptcies actually rose in the first half of the year to the highest level since 2021.
The trade war wasn't protecting anyone, it was isolating everyone. By late October, the message was clear. America had the power to shake the world, but not to control it. Trump's 100% tariff threat had triggered the biggest single-day market loss since the pandemic era. And yet, in Beijing, the mood was calm. China's strategy was slow, structural, and deeply patient, the opposite of Trump's volatile showmanship. It wasn't just about tariffs or trade anymore. It was about time. China was thinking in decades. The US was reacting in news cycles, and the balance of global power was shifting. As the dust settled, gold glowed at record highs, stocks limped into recovery, and global investors quietly redrew their maps. America had fired the loudest shot, but China had made the smarter move. In 1 week, Trump had reignited the trade war, tanked global markets, and reminded the world that chaos has consequences. The lesson? In geopolitics, power isn't who shouts the loudest, it's who can stay silent the longest. And as the world watches the next APEC summit approach, one question echoes through every boardroom and trading floor. Will Trump escalate again, or will this time the markets fight back? If you found this breakdown useful, hit like, subscribe, and hit the bell.